Welcome to the Best of U.S. Investors, Two Regular Guys show. I'm Trent, and that's Mark over there. And today we're going to get into tomorrow's Fed meeting, what could happen based on what the Fed does, how that's going to affect markets, and what sectors or asset classes are stronger depending on what he does. We're also going to talk about retail sales numbers that came out today. And of course, we're going to talk about Intel because Intel blew up through the roof last night because of some deals, but the option market was telling you something in the last couple hours of the day that something was going on with Intel. So let's get going.
All
Hey,
right.
Mark.
How's it going?
It's good.
It's
Another
amazing because it's Tuesday the 17th about noon Central Time. So that's when we talk about charts. That's when we're talking about them. But an hour ago when we started talking, just between me and you, the markets were, the Dow and the S&P were at record highs, and now they're all negative. Okay. So hopefully people didn't get sucked into the retail trap this morning, and we'll see where they end. But something happened that tomorrow is when the Fed comes out. Is it a decision between a quarter point and a half a point, or what is it? I don't know. It's just this is the way the markets are extremely um, touchy these days. I think is the word for it.
Yeah. Yeah. I
So
think it's people are putting a lot of emphasis on news events in the last year, really.
well, in
And
reports.
reports, news, narratives, whatever. And it's getting really built up on this one day tomorrow based on whatever they decide the FOMC decides to do. And either way, it's sort of like a double-edged sword.
Well, you're right, and I don't care one way or the other if they do it a quarter point, a half a point. It takes so long to get through the system anyway. And again, we were talking yesterday. What happens if they don't do anything? Has anyone even talked about that? Possibility
Right.
might be a small one, but it is a possibility because we have all kinds of issues that haven't been resolved yet. And I'll go through them here in a minute, but you know, it's going to be interesting tomorrow, and just grab some popcorn and enjoy the show because that's what's going to happen. And it's always weird because they come out with their statement, and then the market does whatever it does, and then the Fed chair comes out and does his presser, and then he screws it up normally, and really tanks the market or whatever. So we'll see what happens. But you're right. The problem with all these reports, as we've been going through week after week after week, is the data that they give us isn't the headline data isn't the right data because they come out the next month and it's all revised down. Okay, so we're trading our decision. I have very little trust in these reports, and like the jobs reports, if they come out, you might as well just revise them down, 50,000 jobs.
It's
So
like look at the last year of revisions and go, okay, what's the average deviation? And
yeah,
that's what it really
yeah,
is.
yeah. Well, we'll go through that a little bit because my little rant is today. We're talking about the Fed. Okay, so the Federal Reserve will kick off its two-day meeting uh, today, okay, this morning. They're widely anticipated to lower interest rates for the first time in 4 years, with anxious investors such as us, okay, discussing whether policymakers will consider a quarter point cut sufficient for an economy showing signs of slowing, or whether they decide on a half a point reduction instead. Okay, so that's the big word out there. Okay, what's it going to be? Again, I don't care. Okay, cut, don't cut, whatever. Here we have been talking about for what 18 months about cutting, cutting, cutting. Well, the market's done nothing but go up. We were at record highs just an hour ago. Okay, with interest rates at 5.25%. Okay, why would they need to cut if everything's fine? And if the market is the economy, which I don't believe it is, why would we need to cut to make the market go up? Because it's going to go up anyway, and that's what's been happening. So when you look at it, the S&P has actually slumped an average of 4% in the 6 months following the first reduction of a rate cutting cycle. So if the economy was in a recession, okay, so it goes down 4%, and that data is from Evercore going back to 1970. That compares with a 14% gain for the S&P 500 when the Fed cuts in a non-recessionary period. The index is up about 18% so far in 2024. So, you know, what they're saying, these companies, is depending on if we're in a recession or not, will tell us whether the market will go up or down after a rate cut. When you look at treasury yields, because that's tied in too, they move inversely to bond prices and they tend to fall alongside rates when the Fed eases monetary policy. The Bloomberg US Treasury Index returned 6.9% on a median basis 12 months after the first cut, Citi strategists found, but 2.3% in a soft landing economic scenario, or when we were more in a recessionary area.
Right.
Again, this is take it for whatever it's worth. The dollar strengthens a medium 7.7% against a basket of currencies a year after the first rate cut when the economy was not in recession, an analyst by Goldman Sachs said, of the prior 10 cutting cycles. That compares to a 1.8% gain in the same time period when the US was in a downturn. Okay. So we see different results based on whether the economy is moving into a recession or it's not moving into recession, according to these strategists, analysts, whatever you want to call them. So today, the benchmark interest rate stands at 5.25 to 5.5%, up from nearly zero in 2022. Historically, equities have performed better after gradual rate cuts compared with swift reductions typically seen during economic crisis. So again, gradual, 25 basis point, not so gradual, maybe 50 basis points. Maybe that's what we're seeing. Okay. Sectors of the economy are also impacted in different ways due to shifting consumer demand and interest rate sensitivity. So consumer non-cyclicals see the strongest return after the first rate cut, particularly during recessions, if we're in a recession, which they say we're not, which I think we are in certain parts of our economy. And that's thanks to steady demand for staple goods. That traditionally defensive sector includes companies like Procter & Gamble, Walmart, Coca-Cola. Notably, consumer staples are the only S&P sector that have produced positive returns on average during the recession stage of the business cycle since 1960. During the slowdown phase, it also outperformed the vast majority of other sectors, averaging 15% return over those periods. So that's the consumer non-cyclicals, okay? On the other side, financials historically experience the weakest performance, and this is due to the fact that interest rate cuts often signal that the economy is slowing, putting pressure on loan growth, credit losses, and default risk, okay? So that just makes sense. So again, consumer non-discretionary things like Coke. You were talking yesterday, we were on the Platinum Live channel about Coke. Have you seen Coke lately? It's just going up. Well, that's where people go because it's something that people need. The Coke products, Procter and Gamble, you need toilet paper, you need soap, you need shampoo. Those are the things you kind of need,
Yeah.
when we're let's take a look at the economy and see whether you think we are in a soft landing, a recession, or heading towards a recession. So today, the U.S. retail sales came out, okay, and the headline numbers said U.S. sales in the U.S. edged up 1/10 month over month in August of 2024, following an upper revised 1.1% surge in July and beating the forecast of a 2% decline, a 2.2% decline, signaling, according to the talking heads, consumer spending remains relatively strong and resilient, as Janet Yellen, my friend, would say. However, unfortunately, retail sales data is not adjusted for inflation and it includes mostly goods. So if you adjust it for inflation, retail sales were flat year over year. So again, that increase in cost was probably the increase of inflation, which is at 3 point whatever percent. So that's what you're seeing. You're not seeing people going out and being resilient and buying more. They're just buying at a higher price is what we're
So
seeing.
that's then driving retail sales up is because the inflation cost. I mean, are they basing on
Well,
revenue?
they're basing it on the cost. Okay. So look, retail sales last month was $10. Our inflation rate is 4%. Okay. So now it's $10.40. So the retail sales went up. They didn't count for inflation, the cost of everything going up, making the amount of sales go up also. Does that make sense?
Yeah.
So yeah,
It's one
again,
of those things. What do you believe?
yeah, you got to dig
You know
into
what
it.
you believe?
You got to
You
dig
believe
into it.
you believe what's in your wallet
Yeah. Yeah,
at
you
the end
do
of
it.
the month. what is in your bank account?
Yeah.
You know, do you have
Well,
more
and
than
is
you
it
did a year ago?
are your digits going up or are they going down? And
Right.
most people's are going down. So
Yeah.
let's look at some of the other pillars of the economy because we're looking at whether you think the markets are going to go up after rate cuts, the markets are going to go down after rate cuts. So employment, we talked about non-farm payroll increased by 142,000 in August, but of course then came the revisions. Okay, the change in total non-farm payroll employment for June was revised down by 61,000 from 179,000 to 118,000. That was June. Okay. If you remember July, it came out at 114,000, and that's when the market tanked. 114. So we just revised down to 118, which is 4,000 more than July. And then in July, they went down 25,000. So it's actually 89,000 new jobs, which is nothing. Okay. But the headline numbers there, and they never talk about these revisions. So with these revisions, employment in June and July combined is 86,000 jobs lower than previously reported. It also means that 4 consecutive job prints have been revised lower than 6 of the past 7. Okay. So you tell me, are we in recession or are we resilient? Is the jobs, is the outlook for jobs good or bad? Well, according to the government, according to the talking heads, it is. But according to the Bureau of Labor Statistics or the Bureau of BS, they like to call it, while the number of employed workers did rise by 168,000, looking closer at the composition of this increase is disastrous, and that's because it consisted of an increase of 527,000 part-time jobs, offset by a 438,000 plunge in full-time jobs. This means that since last June, the U.S. has added just over 2 million part-time jobs and lost over 1.5 million full-time jobs. Okay. We all know part-time jobs pay far less, don't offer benefits, and generally lead to a suboptimal outcome for the labor markets, one of which is the need to get more than one job. And sure enough, the number of multiple job holders or people who are, for whatever reason, have more than one job jumped above 8.5 million back to all-time highs. Okay, so if you have to go out and you lost your job, and it takes 3 jobs for you to make up for that loss in your income, then you count for 3 new jobs. So thanks. And if I do the same, I count for 3 new jobs. So between the two of us, we just created 6 new jobs for the United States of America. And that's how they report it.
You
Isn't
know,
that nice?
yeah. You know what's interesting? Most people don't understand how that's counted.
Right.
I got in discussion with some people in Facebook, don't do it, just walk away. And I couldn't. And they started talking about, but jobs are going up, this and that. They don't see the revisions, they just see the headline number. But they also, when I explained how they calculate the jobs, crickets. No, no, that's not. Yeah, yeah. You have you have 3 part-time jobs. I have 3 part-time jobs. That's 6 jobs. It's
Yep.
not per person. It's per job. Uh-oh. Oh, and that's a misunderstanding of all this.
Yeah.
And the worst part of this is it's not an increase in full-time jobs, it's increase in part-time jobs.
Right. And this chart shows that over month per month. Every month, the number of full-time jobs is negative, and every month the number of part-time jobs grows. Okay. So again, does the jobs report tell you this? Does Steve Leisman get on and go to page 973 and say, oh, did you know that there are more part-time jobs and the full-time jobs are actually getting less? No, he doesn't do that. Why do they do that? Why don't they tell us the truth? Why do we have to go look at it? Which is why we do go look at it, because it's ridiculous.
Yeah.
Um, here's a chart I'll show you, and this is the number of people with more than one job. Okay,
Wow.
I mean this goes back to '94. Okay,
This
and
is
this
multiple
is as
job
high,
holders.
yeah, more than 8.5 million people now. That's the highest we've had since 1994. Okay, it was higher than right before the pandemic. Okay, a lot of people are, you can go back and make a case that we were heading into a recession right before the pandemic hit, and
How
you can see what
convenient.
happened. Yeah. So again, here we go. What
Yeah.
do you believe? What don't you believe? So let's go into a little more, you know, Foreign-born versus native-born workers. Since October 2019, native-born U.S. workers have lost, that's people born in the United States, 1.4 million jobs over the same period. Foreign-born workers have gained 3 million jobs. In the past month, the U.S. has added 635,000 foreign-born workers while losing 1.325 million native-born workers. This was tied for the biggest one-month drop in native-born workers since the COVID crash. I mean, so when you look at under the hood of the non-farm payroll report, we find job market that is at best very weak when considering the real numbers regarding part-time versus full-time, the number of people in multiple jobs, the number of foreign-born workers injected into our economy, either legal or not. Okay, I'm not going to get into that, but we have a lot of people coming into this country right now. Okay, and yet the unemployment rate ticked down only 0.1% to 4.2%. Figure that one out. Okay,
What
so
what
there's
would
a
happen? What would happen if you excluded them out of that report? How
well,
would
we would
that
have negative.
number change?
We would have negative. It would be negative. We would not show job growth. Okay.
Yeah.
So again, how well is the economy doing? I'll leave it up to you guys to decide. I'm just telling you what the numbers are from the government. So we're seeing we have issues in unemployment and jobs. Okay, that's a fact. Okay, I can go through it, and you and I have gone through. I can go on ad nauseum. All the companies laying off thousands of people every week. Okay, and we see it not just little companies, but Microsoft and Meta and every company. We've seen bankruptcies. We've seen closings of companies. Okay, more and they're higher than they ever have been. Let's talk about inflation. Okay, because inflation is supposedly under control. Okay, it's under control. We haven't got to our 2% yet, but it's under control. Now we got to look at unemployment. We got to fight that. So how are we going to fight it? We're going to lower the interest rates. Perfect. But the problem is that historically, lowering interest rates does not bring unemployment level down. Okay, it just does not. Seems like the only thing that brings the unemployment level down is government reports, and how they calculate it. That's how I see it, but that's just me. So when we look at core inflation, it was reported last week. Okay, that's what the Fed looks at. Core inflation, which strips out, the more volatile food and energy components because we don't need food, we don't need energy, obviously, but it strips it out. It actually advanced by 0.3% on a monthly basis and above the 0.2% predicted. Year over year, the CPI remained elevated at 3.2%, well above the Fed's 2% rate. So we're seeing inflation go up. Number of jobs go down, unemployment go up, inflation still going up. Okay. Um, let's look at the producer price index. Okay, this is what producers provide. Core producer prices in the United States, which excludes food and energy, rose by 0.3 over a month in August 2024, compared with a forecast of a 0.2 increase. So again, here we are. Inflation's going up. Well, it's ticking up. We have a chart here. I believe I can find another chart on this. Um, where's my inflation chart?
And you think about it, if inflation continues to rise, and the research I've done says that we'll get into fourth quarter, inflation will start rising even more so than it is today. What then does the Fed do? If they've lowered 25 or 50 basis points, are they going to raise it back?
Yeah, I don't know. That's what they did in the past. You know, that's why they keep saying Powell doesn't want to be Arthur Burns. He doesn't want to be where that he loses because he starts too soon. He hasn't got to his goal of 2%. Remember, this 3 point whatever percent is just the rise month over month or year over year. Inflation has not gone back to where we started in 2020. We're still up 20 to 30 to 40% on prices. That's just getting us back to 2% every month or year over year. So we're still going up. Prices are still going up. Okay, just not as much.
So during the late 70s, early 80s, Volcker raised rates, Fed funds rates, what, over 10%, and
Oh,
that was to
18%. Yeah,
18%, and that was to kill inflation.
that's right.
Yeah. So is that the only way they get back to a normal inflation rate?
That's the only tool they have. And you got to remember the Fed funds rate, it's what banks lend to each other overnight. Okay.
Yeah.
It might have an effect. It follows the 2-year yield. So the 2-year yield is 2 basis points below the federal funds rates right now. And historically, they'll follow that. They're 2 basis points ahead, higher than they should be according to the market. And the bond market is telling us that the rate is too high right now. Okay. However, the bond market doesn't care much about inflation. But if you look at these charts, and the blue lines are core inflation, from where we were at 9%, we have come down. We've steadied off, and now we're starting to see a tick up. Okay. Uh, on both month over month, you see month over month is higher than year over year. So we need to be careful if this inflation comes back. Uh, you're right. We have to raise rates again. They don't want to do that.
Oh
But
my gosh. Can you
so
imagine?
so we have a situation where they have declared victory on inflation, which they haven't. Okay,
Yeah.
and now they're going to go address their second mandate, which is full employment, which raising rates or lowering rates, whatever. Lowering rates is not going to, historically uh, do anything about unemployment. That ship has left port. Okay, we're going to see more and more job losses, and we've talked about this, in past two regular guy meetings. So when you look at, there was a recent study by Savings.com, and it showed that nearly 80% of U.S. adults have cut back on groceries due to the rising prices. Remember, inflation is under control, with 37% reporting they're extremely or very concerned about their ability to afford enough food. And even more people are worried about the affordability of healthy foods. Okay. Interesting.
That's hard. I went to the grocery store last night. It's Ginger cooked some crawfish etouffee. I needed a bell pepper, celery, a couple other things. Did buy a bottle of wine,
There you go.
but it was 13.95 on sale. Um, it
Ooh,
was
you go. You're
$75.
extravagant. Yeah.
Yeah.
And you
And
walk out there
and
with one little bag, you're like, what the heck?
yeah, I mean, I bought some eggs. I did get a BOGO, buy one, get one on English muffins. But what got
That
me
was
was the
ten
produce.
dollars, right?
What?
$10 for the
Actually, it was
eggs.
only six.
Oh, there you go.
Now, I mean, they were green, but I mean, just scrape it off, right?
Well, I mean,
But
you and I talk about it all the time. We talk about it in the platinum chat. We talk about it on the Zoom call. Do they think we're idiots? I mean, seriously, inflation's under
yeah,
control. No, it's not. I mean, just go and look at the charts. Credit card debt is a record high. Savings low or record low savings rates. Okay, something's got to give. Do I have a
that
chart?
it,
I do have a
that
chart.
that information is not being put out in the media.
No.
Credit cards are at all-time highs. People are 90 days delinquent on credit cards.
Yep.
They're not putting that in the media. They're not putting, this other information out there because it's really damning information to the existing powers.
Yep.
And
And here it
that
is.
doesn't exclude, that isn't one party or the other. That's just them, all
Yeah.
of them.
Yep. And
Yeah.
with record, what are people doing? They're putting their daily living, food, gas, everything on their credit card. You know,
Yeah.
and they've pretty much exhausted um, their savings rate. Okay,
So
amazing.
let me ask you one thing, Mark, on
Yeah,
the Fed. Let's say they lower rates 25 basis points. Does that translate into people's interest on credit cards?
no, no,
No.
because what is the Fed's rate right now? 5.25 to 5.5. Okay, right.
5.33.
Let's go look at
The
where
effective federal funds rate is 5.33.
there's credit card interest rates. Okay,
Well,
let's
that's
see. We
that's
are
not even. Are you saying that it's more like 29 to 33%, dude?
well, yeah. This is Q3 2024. This is just average. Okay,
Okay.
average interest rate. So yeah,
Yeah.
you can get higher than this. Okay, but you can see it's definitely gone up. Okay.
Yeah.
So you think this will come down? Probably not. Okay. My property tax is going to come down? No. Or my insurance on my house going to come down? No. Okay. So there's your
So,
inflation. There's your
so the
inflation.
so when people think, and we've talked about this, and I know the answer to this, when people think they lower rates tomorrow, let's say they do lower rates, there is a chance they won't do anything. They lower rates. People think credit that their mortgage rates will go down. People think their credit card interest rates will go down. Car loan interest rates will go down. But that is not necessarily true. Instead, it's the banks will borrow between each other overnight.
Yeah.
It will be the rate.
Yeah.
And those banks already know that things are bad. They've got to get what they can, so they're not going to adjust rates on credit
No.
cards or loans or anything.
No. I
No.
mean, I think doesn't the housing market follow the 10-year? So if the 10-year
Yeah.
goes down on its own, then you'll see mortgage rates go down. But it has nothing to do with the Fed, you
Yeah.
know. But mortgage rates already have gone down, okay, because
Oh
the
yeah,
10-year's
there
gone down. Yeah.
was the 30-year. I'll bring it up here.
There's a
Um,
I mean, this is just total consumer credit monthly change. And you can see the blue is non-revolving. Okay. That's like, uh, you know, we got credit cards, we got housing and car loans. And you can see how it's gone up. I mean, to back to June of 2023, back to 2022, that we're not seeing this go down. Okay. We're seeing it go up both on a revolving credit and non-revolving credit.
yeah. Yeah, I think what was it? JP Morgan came out and said their net interest income was dropping.
Yep.
Like they expected like 10 basis points. It was like 20. It was a double whatever they were thinking, or it was 10%
Well,
versus
that was Ally Bank.
Ally. Oh,
Yeah.
okay.
Yeah,
Yeah.
but I also heard that Goldman's trying to get out of the consumer credit card business because they're losing money. And
Yeah.
this is just Discover and Capital One net chart-off ratio. You can see these are charging off of credit cards and consumer debt. It's going up, like 6% of it, and they have to charge off now. Uh,
Yeah.
it's we're starting to see the banks are starting to get hit with this. You think about that, Goldman Sachs trying to get out of the credit card business. Well, isn't that their business? You know, what happens now when the commercial real estate more and more of that comes up for refinancing, and there's no one in the offices anymore.
Yeah.
For banks,
Well,
it's going to be an interesting.
I think part of this lowering of interest rates, and I mean, what was it? Elizabeth Warren and whoever group of them wrote a letter to Jerome Powell about lowering rates by 75 basis points.
Right,
Well, wait a
right.
second. Why?
Yeah,
Possibly because they know the commercial real estate market is just starting to its meltdown, and these banks need a lower rate to refinance
right.
that debt.
There's a lot of stuff that looks bad. I mean, bankruptcies. Okay, according to the statistics from the Administrative Office of the U.S. Courts, annual bankruptcy filing totaled 486,613 in the year ending June 2024, compared with 418,724 cases in the previous year. Business filings rose 40.3% in the year ending June 30th, 2024. Non-business bankruptcies, people, just regular people, rose 15.3% compared with the previous year. Okay. We've seen bankruptcies go up. Is this happening in a good economy? Wouldn't we see those be going down? Wouldn't we see employment going up? Wouldn't we be seeing inflation coming down? And then just on top of that, U.S. holiday sales are expected to grow at their lowest pace in 6 years. Holidays are coming up. That won't be here really soon. Data
Mhm.
showed from Deloitte on Thursday as persistent inflation has dried up savings, turned shoppers more frugal for the all important shopping period. Rising credit card debt and the possibility that many consumers have exhausted their pandemic era savings will likely weigh on sales growth this season compared to the previous one, said Michael Jaruski, leader of Deloitte Consulting Retail and Consumer Products. Okay. So we just saw the charts. We know that's the fact. Okay.
Mhm.
And I can go on and on, but what in this economy I'm looking is actually better for the average American right now. Can you think of anything? I mean, mortgage rates are coming down, but no one can go get a loan because the loans are tightened up, or you don't have a job, or you're worried about that, and your credit's crappy because you've expanded out on the edge of the credit spectrum. I don't know what's good. I don't know. I'm trying to figure it
I
out.
I I mean, honestly, I don't know. It's grocery bill goes up, my insurances go up. Uh, I mean, gas prices are falling. But
But not to the
that
levels they were, not to the levels they were.
no, no, absolutely not. But I mean,
Right.
they are going down. But then again, it's too expensive to travel. We moved Emma into college, and to go make that trip, that set me back like between the place to stay and moving her and all the other stuff over a 3 day, 4 day weekend. Um, I mean, I'm limping back.
Yeah.
You know,
Yep.
a year earlier it didn't cost me that much, as much. A year earlier than that. I mean, you just keep going back.
Yeah.
It's just it's getting ridiculous.
I know.
So I don't
I'm
see
getting
anything getting better.
no. I mean, aren't you getting more like emails and offers of discounts now? Like I'm getting like we
Oh,
fly down to Florida on Allegiant. When we went down there in July, the prices were still fairly high. Now they're like, hey, you can fly on $30. I'm like, wow, the discount. They must not be filling their planes now. Okay,
yeah,
because when they
no,
start discounting, that means something's wrong in their world. You
yeah,
know, look at all the $5 meals that are coming up, and all the McDonald's and Taco Bells and all those too. I mean, we live in the real America as two regular guys, and most of our audience is that way too. And we're just kind of tired of being told everything's fine, and just go back to your
yeah,
hole, and you'll own nothing, and you'll be happy.
yeah. I think the other part of this that sort of bugs me a lot is the denial factor of a lot of people in that, and it's politically driven. I get it. Everybody wants, you and I were talking about Nebraska's team, college
Yep,
team. Yeah, I
football
mean,
team.
oh, they just lost by a point. Oh, that ref, bad call. You know, I mean, we all do it. I mean, we did it with the New Orleans Saints. I mean, yeah, they're a great team, but it'll happen. four
Well,
or
the problem
five
with
years
problem with us
later.
is for the last 20 years, our football team hasn't been worth anything. But now we're
Uh,
3-0, so people have got that back. That we're great
yeah,
again. No, we're not.
but that's the same from a political standpoint. And I honestly just wish people would just step back and look at the data and look at the facts and go, is it really better? And take the party element of it and who you're rooting for out of it and just look at the facts and how is that going to affect you in the future? And I think what you'll find is every party, I mean, for what, since Clinton administration and his lowering of the guidelines on mortgage lending, and when they loosened those up, really it just started back then. And that was that I exclude the party element of it. That was just get the economy rolling, kind of move. And the biggest purchase you'll make in your life is a house payment, as a house, not a house payment, but a house. And it's just accelerated in what, 20 or 30 years,
I think
and
it even
now
goes.
we're so far up here on borrowed money, leveraged money, where it's, I don't know how much higher we can go.
I think it goes back even further to the Nixon administration when he took us off the gold standard and we could start print money. Because when we started printing money, that started the devaluation of our dollar and the value of our dollar. And that
Right.
was fine as long as you kept interest rates low. But now, because inflation came and even devalued your purchasing power more, they had to raise interest rates. Okay. So now you've got devalued dollar, you've got inflation cutting away your purchasing power, and you can't borrow anymore because it's too expensive. So we've got a triple whammy right now hitting the American people. And we're all
And
feeling
look,
it. I mean, you're right.
yeah,
You know, vote for self-preservation. What is best for you and your family? I mean, seriously.
yeah.
And
And the problem is, I don't know. That means you just don't show up on election day because they're really both parties don't have a game plan that's going to fix this.
Well, I think
Um,
for me, I think we have a choice. We've had 4 years of one and 4 years of the other. Which one were you better under? And that's a personal choice of what you think you are. And that's
yeah,
that's how I'm looking at it. Okay.
yeah,
That's all I have. That's all that's been offered to me. And so I have to go, with the choice that I've already experienced. Okay.
yeah. I mean, you only have
I
two
mean, to not
choices.
to not vote to me is kind of cop out. Then you
Yeah,
have no
I
right to
mean,
complain. My mom always said, "You don't vote, you
right.
have no right to complain."
I would agree with that. Yeah. I think at the end of the day, it's sort of which is going to maybe get us to a better place element. I don't know. Anyways, off the
All I know
political.
is we need to get the pricing back to where it was. We need to get our inflation down. We need to
Yeah,
stop printing money. We need to. I mean, I didn't even get into the deficits and the record amount of spending we did last quarter. In the government. And
yeah.
it's totally destroying our ability to pay this back. How are we going to pay back $36 trillion? Well, we're not. Okay. And we've got unfunded, liabilities out there like Social Security, Medicare, and all that. That the administrations who administer those are like, we're going to run out of money, and no one cares because we'll kick the can down the road. And as Americans, we need to take control and say, enough is enough. Let's stop spending money on the the fertility uh, plan of a praying mantis, okay, and spend $12 billion so some professor can study that for who knows what reason, and spend it on people who need it on the streets and get people back to work. Why
Yeah,
not? Why doesn't that make sense? Why is that anti-American? Okay, I
right.
don't know. I don't know. Maybe it is. I don't know. Not
What
for
was
me.
it? I think Amazon came out and said, I think it's Amazon. They came out and said people need to come back to work 5 days a week now.
Yeah, I saw that.
I really don't understand why. I mean, I don't really don't understand why people are opposed to that because there's more productivity in a group of people, instead of,
You just answered
you
your
know,
own question. They don't want
yeah,
to work. They don't want to work any harder. You and I both work out of our own offices in our home. We know you have to put an effort in. There's no one
yeah,
there to standing over you to say, get this done. You
yeah.
know, it's a total different mindset. And some people, I'm sure, are putting in a half a day, as opposed to,
Oh,
a full day.
yeah. I've heard people say, yeah, I just log in and it tracks me.
Yeah.
And then they go for a walk, you know.
Have my cat run across the keyboard once in a while.
Right. Well, hey, let's get into one last thing here.
Okay. We want to talk about Intel.
Intel.
Tell me about
Intel.
Intel. What happened yesterday?
Well, let's step back a little bit, and so Intel over the last year or so has gotten an injection of from the U.S. government with this CHIP Act of I think it was like 9 billion or something, and then I believe yesterday they got another injection of 3 billion or something of that sort. But what's interesting is that the the insider information element of this. If you go back so in the last what 4 or 5 years, options have become a big part of the markets. In particular, 0 days to expiration options, which expire the same day. So, for instance, September 17th, 2024 SPY, I don't know, $600 calls, whatever. They'll expire today at 12 o'clock, or I mean, at 3 o'clock at the end of Central Time, end of market close. And these have become a favorite amongst day traders and hedge funds and institutions. So, Intel, which has been basically tanking for a long time and really has lost its footing in the semiconductor world, really is a third player in the whole semiconductor chip world. You got Nvidia at number one, AMD at number two, and way below that is Intel. And so what was interesting is, and I'll show you a chart of this, uh, is that the amount of option volume in Intel yesterday was so obvious that somebody knew something before all of this was introduced, told
Oh,
about.
wow.
Yeah. So if you go back here, this is August 19th. Volume on that was 2,075 contracts. Big day here. That was volume of, that was on the 22nd of August, 1,369. Similar on the 3rd. But you get to yesterday, and the amount of contracts traded, the volume on contracts traded was 144,072. And this happened, if I go and look at a, say, 1 hour chart of this, this is Monday. That's 8 p.m. I can't pull the volume up for some reason, but that was, or 8 a.m. And you can see somebody knew something. You got till, was it 1300 is 1 o'clock
Yep.
Central. Um, all of a sudden, big move in the stock, in the price. Day ended, and then you had market open today, and the options moved through the roof. They peaked out right around 10 o'clock today, and they're headed south. To explain, in I think a lot of people are really don't understand how what happens when you buy an option. Let's say you're Goldman Sachs, and I call you and say, "Hey, Mark, I want to buy 10,000 contracts of Intel, um, 20 calls that expire on Friday." And so you go out and you buy 10,000 of those contracts for me. You are then short that. So to protect yourself, you're going to do one of two things. One, you're going to buy 10,000 contracts of that option, or you're going to buy the underlying stock, which is, Intel stock, and you buy the equal amount of that to hedge yourself, which drives the stock price up, which drives everything higher. They didn't announce this information until after market close yesterday about their deal partnership with Amazon. Um, and what it tells me is we're seeing more and more of this kind of data being leaked out before events happen. And Intel is a prime example. If you were on this, you were in those calls, you made 200% on your money if you got out of them early this morning. 200%. Intel's a dog. I mean, it's not going anywhere right now. I know it's a AI stock Kerry likes, but it is literally a dog. And the only reason it's up is because somebody had some insider information. They drove it up, and now Intel is headed back down south. And I think that's something that really bugs me. Is it bugs me from one side is that this is being manipulated in a lot of ways. You looked at Nvidia calls last week, 400,000 volume Friday's 120 calls. It hit the top. Those calls expired. People made a ton of money over the week, and now Nvidia is headed back down south. You know, and it's being heavy. These individual stocks are being heavily pushed around by this option market and insider information. And I think this is something that if you want to use it to your advantage, you get on and you start looking for volume changes, rates of change on option contracts throughout the day. Maybe you could pick up a couple and make some money, but it's the insiders who have information on this that's working against you and I. Because I know some retail guy came in this morning at 8:30 when the market opened. They bought these calls and they're thinking, oh yeah, it's going to go higher. It's going to go higher. Or they bought the stock and they're, oh, it's going to go higher. And it's not. It's just
No, it's
not.
the
And
same in the
it bugs the crap out of me.
well, it's the same in the indices right now. We record highs, and now the market's just tanking. It's quarter to one on Tuesday, and market's starting
Yeah,
to tank. And was rally mode this morning. Um,
yeah.
Same thing. I mean, people have got to be careful. You got to. That's why we do technical analysis on, the Platinum channel. Um, Someone was talking about Berkshire Hathaway looking good, and I said no, it's missing two of the key critical parameters that I look for before I would swing trade a stock, and there we are. It hasn't crossed them yet, and
Yep.
you just take the emotion out of it and go back to technicals. Understand that there are unknown market conditions out there, like SMCI when they when Hindenburg came out and knocked their legs out from underneath them, but somebody had to do it, obviously, because it seems that they had some issues at Hindenburg. Okay,
Yeah.
now we know now how many people lost money on that because they were all in on AI, and hopefully not a lot, but I know people have. It's a
Yep.
it's a different market. We have we have a macro economy that a lot of people have called the everything bubble going on right now. Okay,
Mhm.
um, and I think the days of buy the dip, which were only the days around the pandemic, are done for me personally. I don't
Yeah.
know that for a fact, but it sure looks that way to me on the charts that people are trying to buy the dip, and those are retail people, and they're getting the rug pulled out of them every time they do it now. So
Yeah.
just be careful out there. Utilize technicals, to help you out, and fundamentals just at the moment don't seem to be in vogue. You know, they
Yeah.
just don't.
Well, I don't think fundamentals have been in vogue for a long time now,
You're probably right.
especially with high frequency trading. And we saw the effects of that during the great financial crisis. This has become a tech, speed, information, um, trade by the second environment. And for the individual investor, under, just buying and holding can whiplash you a lot. And you also you're fighting the devaluation of your currency and inflation as well. So I think it's important to have a better process and have an open mind to that. Hey, maybe being up 100% in Nvidia is a pretty good deal. Maybe it's time to take some profits.
Well, I mean, how greedy can you be? I mean, seriously, to be up 100% is unheard of in most every stock, And
Yeah,
so to think something will keep continuing going up for infinity and beyond, as Buzz Lightyear would say, is
right.
is really not going to happen. Okay,
No.
just the laws of statistics are not going to let that happen. And again, we're already seeing on Nvidia, we had what 122% revenue growth last quarter. Well, that was down from the quarter before, down from the quarter before. Now, is it
Right.
fantastic? Yeah, but what we're seeing is a trend down. And that's what normally happens in a business cycle. Other people get involved. Intel was going to start making chips and AMD start making chips. The price of those chips are going to come down because competition comes in a free market and evens things out.
Yeah.
Just like that's why we used to have recessions without interference to even everything out and reset asset prices. And when we do not have recessions and we try to keep from having natural recessions, the recessions tend to get bigger and worse in between. And
Yeah.
that
And
may be what we're headed to.
yeah, um, yeah, I think that's well said. We have grown this bubble bigger than the previous big bubble, which was the housing crisis. We're not talking COVID. We're talking the housing crisis.
Yeah.
That was a big bubble. And you look at how far we've come, just look at a chart of the S&P. Um, what goes up will come down. It's called gravity. So be careful.
Stairs up, elevator down is what they say.
That's right. Exactly. So
Just be
anyhow,
careful. Have a plan. Make sure you have a plan. We always advocate whether you're trading or investing, have a plan. Follow the plan, take your emotions out of it.
exactly. Well, cool, Mark. This has been pretty good. It'll
Yep,
be interesting tomorrow.
it will.
Uh,
Yeah, FOMC day. So everyone be careful and grab some popcorn. I'm going to and watch it
yeah.
and set your stops on your trades. Join the Platinum channel, learn how to do a little swing trading and get become a member of the community, which we have a really good community. We have
Do.
a live chat that people can hop in on and talk to people, any time of day. Uh,
Yep. We have a great program. We've got the Platinum Channel, which Mark is our leader in that. We get the swing trading program, his watch list, charts of interest in the morning, along with our live community. We get to, people interact with um, many other different features of that. We also have the premium, or actually, we're renaming that the gold level, and that is Kerry's cheat sheet, along with his AI stocks and a access to our Discord and ideas throughout. And who knows, maybe we'll come up with something else here in the next couple of weeks or so.
yep,
But in turn, it's just take some interest in preserving your wealth, especially in the environment we're in. And we're just think of it as a car that you're going across Texas in the middle of nowhere, and you get low on gas. That's sort of where we're at in the economy. So be careful, be
yep,
conservative, and protect your wealth.
yep.
So hit the subscribe button, hit the like button, leave some comments below. Check us out at www.bus13.ai. That's www.bus13.ai. That's our website. Become a part of their community and become a better investor. In the meantime, have a great day and live loud. See you.
And cut.
Good.